Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
After Bernanke speaks, we want to see where this dollar is trading. So what I'm suggesting is that it's just like if you own a stock and there's an earnings report coming out. The one thing that we don't know is what we don't know. And it's very difficult to trade off of that. And I know that sounds silly, but the idea is we're not sure how Bernanke's testimony is going to be interpreted tomorrow. So we have to keep an open mind and we have to say, all right, based on what we're seeing here, the market's either going to is going to hold in this zone here, or it's going to reject. If it rejects, it's likely going to play down into this 119 to 121 level, okay? So always keeping an open mind and just creating those benchmarks for yourself where the probabilities are high of meeting support and resistance.
I think Jason hit the nail right on the head. Looking at price trends, but in the back of your mind, you have to remember what the option experts, the ones that are making the markets here, they believe that it's just as likely to move up or move down each and every day. We may not believe that, but Jason is making a very good point here that with Mr. Bernanke speaking tomorrow, he may say something that could, even though the trend looks like it's such a bull trend for the U.S. dollar, that could force it down. And again, that's why the option gurus, if you will, and that's why I brought out that distribution that they believe is just as likely to move up or down. So you have to react, and that's what trading's about. But understand, as Jason just showed you, you have the focal points, you have the probabilities, and there is never a 100% certainty in anything.
Here we're looking at the YUK, and the one thing to note, and the reason why I selected this is that, as you can see very clearly here, the U.S. dollar is actually losing strength against the yen, or the yen is actually gaining strength against the U.S. dollar over and above all of the other currencies. So again, with that in mind, we need to step back, recognize what the scenario is, but also understand that in and of itself can change at any time. So and again, there are larger economical factors at play right now that is influencing this. The yen carry trade is a term that's been thrown around quite a bit. We won't get into it now, but there are certain things that have been happening within different countries and through the use of different currencies that are now, I guess, what they refer to or what they say are unwinding, that are having big influences on the trading action of these particular pair values. Now, again, the one thing that I referenced last week was this sideways triangle. Now, a lot of times this can represent a continuation triangle or a continuation pattern formation with respect to any sort of preceding trend. But the one thing that I always go back to, and it really goes back to technical basics, is that if a market is in an uptrend, you're going to see higher highs and higher lows, and if a market is in a downtrend, you're going to see lower highs and lower lows. If I see a pattern where I'm getting lower highs and I'm getting higher lows, to me, regardless of what that preceding trend was, that's suggesting that there's some indecision. Now, with that being said, what we suggested is that we wanted to see how the market broke this wedge. And last week, we actually broke down out of that 98 to 100 zone there that we'd identified as being a key focal area. And we actually traded down really and uncannily, although we're professionals, we know what we're doing, into this level that we identified. And again, I urge you to go back, check our previous recordings just to see where we place these key support and resistance levels, and you see that the market tends to trade into them. Now, that's not to say that they don't exceed, but you generally see a little bit of sort of consolidation or a little bit of breather take place at these levels. What we saw happen last week is we actually saw prices break down into this lower range and then close back up. And when I looked at this on a larger time frame, this particular pair value, the YUK, or the U.S. versus the yen, is actually or was actually trading and traded right into a very key level, which represents an area where we may see a possible retracement, although our MACD still suggests low and our RSI still suggests momentum to the downside. We have to recognize that with this very bullish candle here, we may see a pull back up into this range. And in fact, right now, with the markets being open, we're trading now at, we're still in that range. We're about 93.8. So we're still trading in this range today, but the idea is that with it holding here, we have to be open to the possibility that although there may be a continuation, we might see a little bit of a pullback into this level. Now, if we believe in the bigger picture that the YUK or the U.S. will continue to lose strength against the yen, then that pullback just gives us an opportunity to enter in at a more effective price for a continuation to lower lows. Again, not a recommendation, just a way that you might be able to interpret that information.
A friend of mine, he studies technical analysis very seriously, and he once told me, he said he believes that you get three sort of gaps. I think he called it the breakaway. I forget now what they're called, runaway, breakaway, and exhaustion gap.
Yep.
Right. So, do you subscribe to that, sort of that three rule?
Well, I'll tell you, it's actually difficult to apply that to these charts, and the reason being is that, of course, with the FX market being a 24-hour market, we're simply seeing overnight gaps, and so that, because we're looking at a daily chart, and obviously we're not looking at the 24-hour market here. The price is actually traded within those gaps. It's just that we're not seeing it on our charts here. So, there's another saying that all gaps get filled, and you have to add that addendum to that, which is eventually. And right. So, on that note, I would just look at this and say, okay, there's several gaps here. But, hey, you know what? We may come back and do some backfilling in here, but my belief would be because it hit a support level, not because it's retesting or trying to fill that gap. And then I would suggest further that, there's no reason that if we break this level here, that we're not going to play down into our next level, which is the 88 to 89. So I'm not looking necessarily for this then to start retesting these gaps. But you can identify those gaps, but at the same time, I think you have to take into consideration everything else that's going on in the information that you're being given presently. So
that makes sense.
If that makes sense.
I've been saying for the last couple of years that ever since I've been watching FX, which is about 18 months or so, that the most important currency in the world to me is the Japanese yen, just because. Again, it's not for any other reason that it's the cheapest. It's the cheapest one to borrow. And yeah. I always like to look at the one that's is the cheapest, which is going to be the Japanese yen, and the most expensive, because more than likely those two, especially if you put them together, they're like oil and water, and they're going to cause crazy things to happen. And I guess that's what we've seen in the last maybe 6 months is that if you look at yen, where a lot of the shrewd investors that didn't turn out to be so shrewd were shorting yen and buying Australian dollars to gain, as you said, we can't go into the carry trade, but that's essentially what they were doing. And now they're actually trying to close those positions out, and that's what I like to do when I'm trading is really trade. I hate to say this is the way I trade, but I watch the charts, but I also want to know the story behind it, and that helps me. And the story behind this, I think, is that most shrewd investors, big, large investors, are short yen and they are long Australian dollars, actually. So those two, I think you have the Australian chart also. So I just want all the attendees to keep their eyes on all the pairs, but especially the YOC and especially the AUX, because that may help them not only in currency trading but in their overall portfolio.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.